Hello everyone, this is Jeff from Data Finance. Welcome back to our channel. We are with you on the first day of the week, on Monday, 4th of April. Alright, on this video, we'll cover some news first, then we will go ahead with our charts. Before starting our charts, you remember last Friday, we have shared the labor market information, labor market report of US. It was strong, and as expected we have told that we will see a high level of dollar index in coming days. The reason is expectation of Fed hawkish speeches, and momentum will go higher and higher. It will just test close 99. We have told like that, and it's happening right now. The expectation of that one is getting stronger. 0.50% rate hike in May is just becoming a reality in the market. The market is starting to price that one. Let me just show you something what happens. You remember in March meeting, so it was just pricing the same level, like it was just rising just before the meeting. It was going higher and higher. When that happened, we just have seen someone. So when we get closer to May meeting, in like a May Fed meeting, probably we will see that one crossing that one, because the inflation is not stopping in US. Just only one thing can happen, is the base effect is just getting closer. If US somehow can just keep the price of oil with the recent attempt to $85-90 level, then we may see some relaxation in inflation, because the prices of oil started to rise on that level, and we will definitely see some relaxation on that side, and people will just relax on more. All right, that's expectation. And this morning we have received February Germany balance of trade. So that was really bad. Previous year it was 17 billion euro trade surplus, and this year only 11 billion euro trade surplus. And this is for February. And you know, like Ukraine Russia stuff just started on 24th of February, and on the last week of February. So the effect was not certain in March. When we receive the March trade-off balance, we will see really big decline in trade surplus, because the price of energy, the money paid on energy, has risen. At the same time, the thing, for example, cars and other important things, Germany sells to Russia, has declined because of sanction. So we will see that trend goes on like that. Already German trade surplus was on decline. With these high energy prices, it will decline more and more. Even in the coming years, we may see trade deficit in that one, and that's not good for European economy. Let's start with dollar index. As you can see on our chart, and it's rising because of these expectation of rate rise, because right now the thing is happening, just the alarming rate of recession in the US. If Fed doesn't make the necessary attempts on time, a recession will start. 2-year bond interest rate is higher than 10-year bonds. That's not good sign. Even if that happens, that's an alarming case of that one. So Fed definitely should raise the rates more than 0.25. So 0.50 idea. When it gets stronger, we will see stronger dollar. Let's look at gold.
You are ready to win with us. GAN Market.
All right, as you can see here, Gold cannot rise. The war is just becoming more wild, but still that is not making gold to climb higher. It's not helping. Reason is US bonds, especially 2-year bonds. Right now, you are just receiving more money on interest for 2-year bonds, and at the end of 2-year bonds you're receiving the money. That's good, and that is making a lot of pressure over the golds. As long as this dollar index and then bonds goes higher, we will see decline in gold prices. The critical level still 1912. If it just goes under that one, we may expect to see 1875 is still possible, so we should wait and see. But right now, a small decline until that level is possible. Our last chart is US oil, WTI crude oil prices, because it's affecting a lot of things that's important for us. As you can see here, it's just trading below $100. $100 is a critical psychological level for oil. There are a lot of progress on that one. For example, last Friday, as you remember, and last Thursday actually, Biden just said release of oil from SPR. Each day 1 million barrel from SPR, and other countries are just joining that one. And an important thing is Iran just told that they will just go back to a nuclear deal only to conclude that one, and soon it will happen. They just told like that. Another thing, there is a rivalry between and a conflict between Yemen and Saudi Arabia, and United Nations made 2 months of ceasefire this conflict, and it's happening for the last 7 years, and this is the first time it's happening. These will just make to stabilize the oil market, because if it doesn't stabilize, the world will just suffer more and more each day. And as you can see here, it's on decline. If it can just manage to go under the $97 level, then we may expect to see decline until to $90, and that is perfect scenario for US and European countries. Otherwise, they cannot live with this high inflation. Thank you so much for watching us. We will be together on more news, and then we will cover more charts with you. Have a nice and profitable day. Bye.